Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about the man, the myth, the legend, Warren Buffett. Most of you all know who this person is, a famous billionaire investor with over $70 billion in net worth right now at this point in time. So Warren Buffett is definitely no one to scoff at. He has made a lot of money through investing over time, and he's been one of the larger figures in the finance community, emphasizing some very valuable common rules of the stock market, like your typical things such as don't try to time the market, concentration versus diversification. Now, he's talked about different scenarios where concentration can benefit you and other scenarios where diversification can benefit you. And when it comes to the general rules of the stock market, Warren Buffett is one of those people that just emphasizes common sense. Things that I like to do, like I said, dollar cost averaging. I don't try to time the market. I just buy when I think a stock is solid for the long term. So it's always interesting to see what Warren Buffett is purchasing, the moves that he's making in the market, given the fact that he has made a lot of his money simply from investing, and he has also given a lot of good pieces of advice over the years. So this is a person, regardless of how his stocks have been performing lately, yeah, there's a controversy over the airline stocks where he dipped out of a lot of these airline stocks completely. And then, of course, just a little bit later on, after he exited those positions, we had this typical V-shaped recovery that we saw. So it was really unfortunate that he happened to exit airlines as soon as they started to recover a bit. But honestly, his moves with airlines, for example, we have Delta Airlines, his moves with these airline stocks actually hurt the stocks themselves a little bit more because, for example, if you're investing in a popular stock and one of the greatest investors of all time exits his whole position out of that stock, in my opinion, it's honestly going to give investors a little bit of a scare, and at least make you question what's going on with the stock right now, what about the future, how the future is looking, whether it's positive or negative, and whether you should maybe consider doing what Warren Buffett did, or if you should continue as normal. So with the whole Rona situation, airlines and vacation stocks have really been hit a lot harder than some of these other stocks in the stock market, such as like the tech sector. The tech sector is performing just as amazing as ever. So really the ones that are struggling the most right now are the airline stock, the cruise line stocks, and then of course some of the bank stocks as well. And speaking of bank stocks, let's go ahead and check out this article discussing a recent purchase of Warren Buffett. And we're talking about a big purchase here, over a 10% position. But before we get into that, if you do appreciate these videos where I give you all financial news and also just give my perspective and ideas on things, then please make sure to smash that like button. It really does help me out. But anyways, this is an article by CNBC from author Thomas Frank, and this states Warren Buffett adds to his Bank of America buying spree, bringing his stake to 11.8%. And as it says right here with the key points of this article, it states a Securities and Exchange Commission filing showed Buffett's conglomerate bought 21.2 million shares of the banking giant between Tuesday and Thursday. That increased Berkshire's stake in Bank of America by $522 million and sets its total position in the bank at 11.8%. In total, since the recent buying began, Berkshire has purchased $1.7 billion worth of the stock. So Warren Buffett has spent $1.7 billion on Bank of America stock alone. So this is a huge move inwards on this position, and it's definitely not anything to take lightly, because when Warren Buffett finally does make a move like this, it means that he at least thinks the stock is likely to be undervalued or worth the value that he's buying in at. So just making inferences off of these moves, it seems that he is making a bold move towards Bank of America, and it looks like he does have some faith in a large recovery in the future and maybe even this stock eventually skyrocketing. So let's go ahead and get farther into this article where it states Warren Buffett's Berkshire Hathaway this week added to his already enormous stake in Bank of America at a time where the Rona has dampened the economic outlook and interest rates hold near record lows. It says that the average purchase price per share of Bank of America was $24.65. And right now on Robinhood, it is worth $24.86. So far, he's probably made a large amount of profit just on those few cents right there of a difference. But as it says right here, Berkshire has been buying small amounts of Bank of America stock every day since July 20th. And that goes along with Warren Buffett's common emphasis on dollar cost averaging. He's practicing what he's preaching, so I respect that. And then it also says, last week, a similar filing revealed Berkshire bought 33.9 million shares of the banking giant by midweek. That increased Berkshire's stake by $813.3 million to more than $24 billion. In total, since the recent buying began, Berkshire has purchased $1.7 billion worth of the stock. And as it mentions right here, bank shares have been hit lately as concerns about the economy keep interest rates low, and Bank of America shares are off by 29% this year. And then at this point, he does emphasize in a recent meeting in May, stating, nothing can basically stop America, Buffett told shareholders during the virtual meeting. The American miracle, the American magic has always prevailed, and it will do so again. So at that point in time, all he had to really worry about was the Rona. Keep in mind, a lot of things have been happening since then in addition to the Rona, but also I'm assuming that that hasn't really fundamentally changed anything for Warren Buffett, even since that initial statement in May, given the fact that he's still been purchasing every day in July after the 20th. So as always, thank you to CNBC and the author for this information in this article. I don't know about you all, but I'm always interested to see what's going on with the big investors like Warren Buffett. But just to analyze the Bank of America stock, we can go ahead and check this out. As it said earlier, I think he's made like 20 cents so far on the shares since he started buying into this recently. But if we look at the share price for the past week, we did see a huge increase on July 29th, and then we've slowly seen a trend upwards this past week for this bank stock. So it's up 2.64% for the past week. That's plus 64 cents per share. So if you think about that, for every single share out of those 1.7 million shares, it is plus 64 cents on top of each one of those. That's a huge gain, even though in terms of a percentage, it's really not that much. And so we can go ahead and compare this to other bank stocks out there in the market, such as JP Morgan Chase. And this is one of those, if you really do a comparison just from Bank of America to JP Morgan, where if you look at that weekly comparison, you can definitely see that Warren Buffett effect right there. And I do think that this positive movement this past week is directly correlated to Warren Buffett's recent big movement into this stock much more, because if we compare this to other ones, like I said, with JPM, it's negative for the week. And if we compare it to Wells Fargo, it's negative for the week. So with a lot of the other commercial banking stocks out there that do exist, with Bank of America being the number one, it is one of the few stocks that is up for the past week significantly in the positive compared to other stocks that are around that -1, and to even like Wells Fargo, almost -7%. So I think some people in these other bank stocks may be considering replacing their current positions with Bank of America. And if you really think about this, it kind of makes sense because, for example, let's say you own Tesla stock, and a lot of you probably do own Tesla stock, but for example, let's say you own Tesla stock and all of a sudden Warren Buffett puts like $15 billion into NIO stock. Obviously, you still have that core faith in Tesla for the long term, but you can't help but admit that it would likely make you at least question or think about, what are my options here? Is it a better move to invest in this other stock? Why does Warren Buffett have so much faith in this one specifically? So when you have a bunch of stocks in different categories and you have a huge investor buying another stock that's not the one that you own, it's going to make you at least consider, okay, what does he see in this stock that is different from what I own? So it's kind of like putting yourself in the position of a JP Morgan Chase investor or a Wells Fargo investor that doesn't own Bank of America or maybe owns some of it, and you have to admit, you probably couldn't help but think, okay, what are my options here? Why is Warren Buffett going into Bank of America so hard compared to these others? So I would say that there are some people in the market that have sold out of JP Morgan Chase and sold out of Wells Fargo and maybe put that money into Bank of America because they see Warren Buffett making huge moves into this. And honestly, if we look at the 5-year chart for Bank of America, it is not looking too hot. We can compare that with JPM. JPM looks pretty similar. These two are actually very similar in terms of growth. Near the peak on February 14th, that was a 101% gain. On February 14th for Bank of America, it was 97%. So these are very similar. Honestly, there's not much of a difference between Bank of America and JP Morgan Chase, just in terms of their charts and stuff like that. Obviously, there's different dividend yields, and with JP Morgan and Chase, you get a higher dividend with a higher peak as well compared to Bank of America. Then Wells Fargo is a lot different. This looks like more of a dividend stock, not much of a growth stock. Even at its peak, it was in the negative. This is a stock that I would personally not even consider when you have the peak near the 5-year marker being at a negative. So this is a stock that I would avoid at all costs. But in terms of just like the similarities with the charts, JP Morgan and Bank of America are very similar. But overall, if you're looking for a decent growth stock with some dividends, Bank of America doesn't seem too bad. However, it just does not fit me personally. If I am going to concentrate my portfolio, I'm going to be be focused on more of these tech stocks that offer a lot of software with some really crazy gross margins. And that also kind of goes along with the cloud services as well. Once you get that initial cost basis over with, it's just pretty much pure profit from then on. So I really like the tech sector, but Warren Buffett has been an investor of things like services and commodities and stuff like that in the past. So I'm definitely not surprised about an investment like this. He did buy into the airline stocks as well. This is what I would kind of consider it similar to. Honestly, in terms of the stock market, I don't think that this is the most ideal option, but I do think that Warren Buffett is likely buying into this because he sees a lot of potential in the recovery. And it does go along with Warren Buffett's statement, be fearful when others are greedy and be greedy when others are fearful. So a lot of people are kind of scared with the bank stocks right now, with them having dropped so much and not recovered like a lot of these tech stocks have. And that especially goes along with cruise lines and airlines as well. So maybe he's using his own advice right here and being a little bit greedy when others are fearful about the bank stocks. So I'm definitely not going to be one to question Warren Buffett, but I did just want to share my thoughts about that. But anyways, I hope you all enjoyed this video. If you did, please make sure to smash that like button. And as always, feel free to sign up to Robinhood and Webull in the description below with my referral link. If you sign up with that link, especially to Webull, you can get up to 60 free stocks right now, depending on how much money you deposit. So it's definitely some nice passive income if you do have a decent amount of money to deposit. But regardless, you can still get one free stock just by signing up with those two links. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.